feel like a rich man? Not really, but let's find out how we might be able to do that, shall we? Time to check in on your money and see what's happening on Wall Street this morning. Boy, oh boy, oh boy. Another set of records on the Wall Street markets yesterday. What the heck's going on? Let's go downtown, actually to his home office, I believe, of Statler Financial Services, where Phillip Statler's standing by. Phillip, do I have you located properly this morning?
Yes, sir, you do. I got one more day of virtual continuing education, and I'll be free for a couple of days. And then next week, kind of the same thing, a big conference, a virtual conference to go to next week. So I'll be back home next week. But yeah, today's my last day, bunkered down here with education, and then hey, back in the office tomorrow morning.
Hey, that's important to discuss for a financial for a financial advisor to stay abreast. Topic of continuing education this week is taxes, if I remember you telling me.
Yes, sir, taxes. So you know, there's a lot of things that go into financial planning, and taxes is a big part of it. And that's why I do continuing education for taxes. That's why I belong to the Ed Slott Master Elite Advisor Program, because those things help us stay up to breast of a lot of changing situations. I know it's not the markets, it's not investment structure, but there's more, like I said, to financial planning than just the investments. And that's what we try to stay up on is being able to help advise our clients through those 401ks, IRAs, and tax situations that they may find themselves in.
And it's probably a slam dunk with a probable change in administrations as of the 20th of January that there's going to be a lot of changes upcoming that can affect tax strategy for the person planning their retirement. Simply on the grounds you change the White House, it ends up changing an awful lot of policies. So an advisor that's up to date on what's going on simply makes good sense, doesn't it?
Well, I think so. Obviously, that's why I spend the time and money and energy to do it, because it's obviously I'd rather be sitting someplace else than sitting here, you know, tied to a video screen watching continuing education. And that's the way 2020's been. Every conference has been virtual. So, you know, there's better places I'd rather be than in front of a screen and spending the money to do it.
I understand that. Setting the table for the morning on the markets yesterday, we had 3 intraday highs set. Nobody closed at that intraday high, but we were off by just a tinge. NASDAQ with a new closing high, up 63 points. S&P was up with another closing high, up a little over 10 points. And the Dow went up 104 points. Again, not a new closing high because we had a close that was a little higher than that, but we're within a gnat's breadth of being at a record on the Dow as well. Boy, the investment markets are optimistic, aren't they?
Well, you and I talked about this before we went on the air. The question is, are they optimistic, or are they just trying someplace to find a place that their money can go to make a little bit of money? Because interest rates are zero.
It's true. We're putting the squeeze on anybody with money to invest, because I was looking at a 1.66% now on a 30-year federal bond. And that's long-term money that most folks don't use very often. So there really aren't very many options to be able to make any money these days, is there?
No, there's not. And I think that adds to a lot of why we're seeing the stock market continue to go up, because just folks don't have any other options. So they're willing to take a little bit of risk now where they wouldn't before, just because they can't make anything at the banks and stuff like that. So they're willing to take a little risk with some of their money.
Understood. From an economic standpoint, not a lot of data coming out of the federal government today. Probably will have some impact from a petroleum inventory report that'll come out at 10:30 or 11 this morning. Otherwise, news items that might affect your money today include a little bit of a kerfuffle over in Great Britain. They discovered a side effect of the Pfizer vaccine, and it needs to be said in very precise terms. If you have very serious allergies, mean of the ilk that require you carrying an EpiPen, the really serious allergies, the British health authorities are saying you might want to back off on the Pfizer vaccine. This is not earth-shaking stuff, but it is kind of a chink in the armor anyway, I'd gather.
Well, you know, obviously it's not much of a chink because it's not affecting the marketplace or Pfizer in any way. So, yeah, I'm thinking that may be that 5% or so that maybe just shouldn't get it for health reasons.
Absolutely. It is one of those things that they did put out the warning is they had a few cases of an allergic reaction to the vaccine. But like I said, the warning is very much in black and white. Unless your allergies are so severe that you need to carry an EpiPen, you probably don't need to worry about this. But still, any chink in the armor is something that at the very least is going to end up throwing a few people on Facebook into conniption fits anyway, right?
I'm sure it doesn't take much there to get them going.
Absolutely true. We're kind of on the tail end of anything resembling earnings season, but you do have a couple of household names that reported, don't you?
I do, and this one's really a household name, Campbell Soup. They reported $1.02 per share. That was 11 cents better than expected. Their revenue top forecast as well. They did so well. They raised their quarterly dividend by 6%. To 37 cents a share. So that was some good news there for Campbell Soup. They were positive a little while ago. Now, for some reason, they have flipped to the negative side. They're down 0.5% right now.
I was going to say it's cold around here. I'm having soup tonight. I figure the weather certainly supports sales, doesn't it?
Yeah, you would think so. Then we had Chewy. Chewy is the online pet supply company. You can get your dog food and stuff like that sent every month or whatever you want there. They lost 8 cents a share, but that was better than the 13 cents they were expected to lose. They did beat on revenue, and they offered and issued an upbeat outlook. So I'm really kind of confused. Other than yesterday was a huge day. They're down 0.8% right now, but they were up yesterday. And this is probably why they're bouncing back down a little bit. They were up almost 6% yesterday.
Woo! So, yeah, that might be a little bit overbounce, wouldn't you think?
I think so. So I think some people are just, hey, maybe they rode that yesterday and decide, hey, I'm going to bail out today.
Understood. What else you got by chance?
So I think that's all I had in. No, I got GameStop in earnings. GameStop, which you and I are surprised they're still around, right? They lost 53 cents a share, which was better than the 85 they were expected to lose. Their revenue though was below forecast, and so they're obviously they're not doing too well today. They're down almost 18% this morning.
All right, and you had one tidbit.
I do have a tidbit.
I know. Yeah.
So this one is not an earnings report, but it's called a company called FireEye, and we've talked about it before, but they are a cybersecurity company, and they got breached by hackers of foreign governments. So it's kind of a little bit of it's kind of funny, I guess you might say. But in all seriousness, it's not good that you've got somebody that has cybersecurity efforts in place that doesn't that actually gets hacked. So obviously they're down almost 9% this morning.
I would assume if your cybersecurity firm got hacked, it's time to change cybersecurity firms. Wouldn't you agree?
I would think so.
On its face, that makes sense. Again, up day yesterday, record intraday highs at all three of the indexes. Two of them closed at records. Often that involves a little bit of profit taking the next day. Phillip, 45 minutes before we open, are we looking in that direction today?
Actually, at this point, we are not, Dave. We are still, it's a little bit mixed, but we got the Dow up 1/3%. We got the S&P 500 up a little over 1/10%. The only red ink right now is the NASDAQ, and it's less than a tenth of a percent down. So looking for a decent open this morning. On the other front, we've got gold and silver both down. Silver's down 0.75%. Gold's down 0.5%. Crude oil is heading up, Dave. It's up 0.8% to $45.95 a barrel.
All right, on the top end of the trading range we've had for the last few days. Overseas market, green ink, wall to wall. Japan had a party yesterday. They closed up better than 1.33%. The rest of the Asian Rim markets also up, as is Europe halfway through their day. Phillip, I know that retirement planning is your specialty, and this is one of those times where somebody got to be thinking, boy, I got to make money, but that involves risk. How do I find you in order to control that risk and still make some money?
Absolutely, Dave. Our financial X-ray is a great way to determine the risk in your portfolio. Give us a call at 863-382-0037. You can go to my website, statlerfinancial.com, where there's a link. You can schedule your own appointment time there. And then join us this weekend for the Statler Financial Radio Show, 6 a.m. at noon on Saturday, 10 a.m. Sunday morning on Highlands News Talk 730.
There's going to be a basketball game, believe it or not, on Saturday, so we're going to miss Saturday noon, but 6 o'clock Saturday and 10 o'clock Sunday on News Talk 730. Fair enough?
Fair enough, man. Y'all have a great day. I'll talk to you again tomorrow.
Thank you much. We'll catch you then. It's 105.7 Light FM and Statler Financial Services, Phillip Statler.
If you owe $26.5 trillion